Hi guys, Harry Otis here, professional trader for 20 years now. Started my career in 2005, still alive in 2026. So today is basically a nothing day, Wednesday the 5th of August. Okay, we had a blistering 2 days, Monday, Tuesday, and today was basically flat. We started out very, very strong on news that, the war might end. It was very positive news. But, the market gave it up fairly quickly. And, is this a false breakout? Okay, are we going to, break the highs, get everybody in, and then fall all the way down? Okay, well, we'll get to that. Okay, and everything that's implied today, because we did have some earnings releases that could be relevant to this false breakout possibility. So let's talk about, first of all, the technical picture. Okay, bullish, we're at highs. Okay, we said before we're looking for this bullish move to either stay in the green. Okay, the green is, let's draw the line here. So why not the previous high? Okay, so it has to stay above in these halcyon highs, in these blue sky level for a week, at least a week to 3 weeks would be great. Okay, but we did have some asterisks from yesterday. Okay, we'll get to that. Okay, but first, so far the technical picture is still bullish. Nothing has given up technically yet. Okay, sentiment, we are at greed still. Second day, flat. Could we get to extreme greed? I don't know, because if you look, we mentioned one of the asterisks yesterday was a lot of calls were probably being bought, and yes, back to greed. This was fear and just skipped over neutral and into greed right away. So a lot of calls are being bought. That's the biggest asterisk. We might have to burn these guys. Okay, and I don't know could it be day 0 GTE calls, 2-day calls that expire at the end of the week? Who knows? Okay, but a lot of calls are being bought and they have to get destroyed. Okay, and maybe more were being bought today. Who knows? Okay, but I know that we are at extreme levels in the call buying, so we might have to retest the lows, kill these call buyers. Okay, so that might be why there might be a false breakout. I don't know. Okay, but so far the sentiment is greed, could run higher, but usually last time it went a little bit higher before tanking back down to fear. Okay, so we have to keep that in mind. Okay, I would hope that we go up for a couple more weeks, maybe the beginning of next week, before retracing and hitting this, the breakout zone before going higher. Okay, that's my base case. That's what I think might happen going forward. Okay, so let's get to the false breakout. Okay, we did say that a lot of calls are being bought as a false breakout. Also, we have the VIX here. Yesterday, remember we said the second asterisk was that the market was up, but so was the VIX. Very, very strange. We expected to go lower. Okay, and this VIX ripped in the morning to 18. Very, very strange. Okay, and then back down to normal. Okay, we could see these low levels for a while. Look, it's been like this for a while. It's been like this for a while. We don't know. And we could drift lower if we get higher, if the market moves higher. Okay, but guys, just know that we are close to lows in the VIX, so we might not get a huge move higher like we did here. Okay, after this move, like the VIX really had to be at a very, very high level for it to go higher. Okay, and that's why I was saying we didn't really get extremes in the fear and greed index. So I don't know what will happen. You don't have to, but I would feel more comfortable if we did. Okay, but we have to play the market we have. So this is what we have. Okay, we're breaking into highs with people buying a lot of calls. So we might have to go down before going up again. Okay, and why I say that is because we have to look at the QQQs as well. This is not at highs. It's lagging. Usually the QQQs should be leading. Okay, so they might go down again. If the market goes down, they will go down again. And the sector that was leading before is the SMH. That's still in a downtrend short term. Yes, it broke back up above the neckline, but it needs to really hold. It needs to get above these levels, the 160, what do we say? The 615 level around here before I'll be more happy, more confident that it's going higher. Okay, so you had the semis, and also how are the semis going to do? Well, we had Sandisk announce earnings, okay, after hours today, and they beat everywhere. They beat across the board. Okay, let's see here. Sandisk earnings are out. The EPS was 39.25. They beat. They're expecting 34.51. And the revenues was 8.97. They're expecting 8.39. So they beat top and bottom line. So the semis are still making money. Okay, so that is good. But the after hours trading, I know we should look not after hours, but for tomorrow morning, like we always say. But so far after hours, it's down. You wouldn't expect to see that. So we still have some negativity, some weight still in Sandisk and probably in SMH. Okay, we haven't gotten out of the woods yet when it comes to the semis and them going higher. So that's another asterisk that you have to look out for. Okay, a leading sector is not leading. Okay, and we did see here that the breadth is still at fear, haven't come back. It didn't cycle up like it did with the calls here. So we're still at fear. We never went to neutral here. The stock price breadth is still down. So we want to see that. We see that the SMH, the chips, the previous leading sector is down. So we want to see other sectors up. Okay, so we're not out of the woods yet. That's my whole point on this SPY move to new highs. So what I'm going to say is that I don't think it's a false breakout, but I do think maybe we have to correct very shortly for a much healthier bounce to happen. We don't have to. I don't think this happens. Okay, but you never know. You never know what can happen. If the war is over tomorrow, it might be good. And remember, the reason we went up initially today in the morning before giving it back up was because the war might be over. There were good news about Trump saying that he might end it. But what happened to oil? Oil, nothing. If the war was over, it would be down $10 a barrel. It's still at $75 a barrel. So oil not buying it yet. Okay, that's why the market wasn't buying it. Okay, if it was really, really buying it, if the market was going to be higher today, we would have had oil tanking hard. Okay, so that's another asterisk you should pay attention to. The war needs to be over, I think, for this sustained move to happen. But maybe the market is looking forward beyond the war. Remember, the market looks 6 months ahead. Maybe the war lasts 1 month. Okay, so it's already over. This sideways consolidation might have been the war 6 months ahead. Okay, so now it's already looking that the war's over. It might rip high. Okay, we don't know. But I know it's not a false breakout. I don't think we go all the way back down. I think we correct in the interim, maybe. You don't have to. Okay, but I don't think it's a false breakout. We have to wait, though, 1 to 3 weeks to confirm. Okay, that's the only way to find out. Okay, so the only good news today is over in the gold sector. Okay, sleepy, boom, rip. So gold is saying something that the oil market is not. The oil market didn't really make a big move today, and yet gold is up on basically nothing. It's up, 100 and, well, after market now, but $167. That's a huge move. Okay, it was sleepy, it was getting exhausted, sideways consolidation, boom. This is a big move. Okay, and if you look at the miners, boom, consolidating, rip, gap up, open. They're at resistance here, so we don't know. We're at the 85-ish level resistance on the GDX, the miners. Okay, and what about GDXJ? Oh, we have some shorts. Yeah, again, there we have some short puts. Sorry, so they're probably going to expire worthless. When it was consolidating, we shorted some puts, a personal account. But we just went heavy long gold, you know that, for weeks now. Okay, so that too. The juniors are also approaching resistance at the 111-ish level. Okay, it's 109. So maybe we wait. Let's go to gold. Maybe we have to wait before. Maybe this is the resistance that before it goes down. But I think I'm still sticking by my plan that it's going to go to this 4,400 level before retracing, forming a higher low, and then going higher. I'm still sticking with that. That seems like the more plausible scenario. So there is something in the gold market. Okay, I don't think it's anything to do with the war. I think it may be because India, we knew that India started buying a lot. I mean, if you look at the news here, you don't really have anything. Lower yields, gold futures climb. Okay, weaker dollar. Okay, but not really that. The dollar was weak. Like if you look at the dollar, Dixie. Yeah, it was weak, but it was weak, way weaker before. So now this is not really weak. It's like lagging. This is a lagging move on gold. I don't know. Okay, to me, it's more like here. Yes, more events caught my eye. I saw somewhere here where here. Okay, gold price jumped by 2,500 rupees to 1 month high in Delhi. Silver surges 6,200 rupees. Okay, so to me, do you remember like during the war trade hurt a lot of countries, okay? Especially India. India is a net importer of oil, and the government of India restricted gold buying from its private citizens so that it could, use that money to buy oil. So it was desperate. It was cutting off the gold trade, if you will. But if it's turning that back on, that is a huge tailwind. Another tailwind, apart from central bank buying, that is going to lift this gold price. Could this be Indian buying that is doing it? Probably, because I probably will have a huge effect, because this is the only factor that I see. I see the dollar muted, and I see oil muted. Maybe it's forecasting the end of the war soon. Who knows? But to me, like, if India comes back on the train of net gold buyers again, instead of like cutting back their purchases, that is a huge plus. Okay, so we had that going for us. Okay, so we saw the earnings, but let's end it by going with with our earnings trade, Shopify. Okay, so Shopify announced earnings this morning, and they beat the bottom line by 4.3% and the top by 4%. So the market, so it ripped. Okay, is doing very, very well. If you recall, our Shopify, we bought the 125 calls expiring on the 14th, next Friday, and we sold the 127 calls that are expiring in 2 days. Okay, so expiring in 2 days, the 127 calls that we shorted, and we bought the 125 calls expiring in 9 days. Okay, we did this calendar spread because the 127s are going to expire on Friday, and they're going to get a huge volatility crush. Okay, so as you can see right now, this is the profile, the profit profile. The stock is trading at about 144, Shopify 144. Okay, as you can see here, 144. And it's this line right here. So you're making about $72 per lot that you did here. Okay, so we're probably going to make money. We're going to let this expire. Probably going to buy back the whole structure on Friday, right before the market closes. It's better to leave it open, because right now, that's at expiration. Right now, the prices are close, but there's a chance that if it falls lower, you can make more money. Maybe it drops to 130 in 2 days. Who knows? So you can make more money if that's the case. So it behooves you to hold it open until Friday, until the expiration. So that's what we're going to do. We're going to hold our spread here open until Friday and close it then. Okay, because we can't really lose that much more of our profits. Okay, the least we can make is $50, and it's already trading at 73. It's not that much difference. But if we hold it, we can really make money. Go to 200, 300 if it ever drops back down. You never know what could happen. Okay, so it behooves us to hold it at this point. So that's it. Another trade booked, almost booked. Let's not count our money before we, sell. But so far this looks good. Okay, so in conclusion, is this a false breakout? I don't think so, but we might have interim weakness in the next couple of days, because a lot of calls are being bought. I don't like the bullishness to new highs. Everybody seems to buy new highs. It's great, but we have to punish these guys, in my view. Okay, so we also had the QQQs lagging, SPY new highs, QQQs not so much, and that's because they're being held down by the AI trade, specifically the chips. Okay, so the chips are also not out of the woods yet, and we saw that Sandisk. You saw normally if Sandisk reports this kind of earnings where they beat on both ends, the stock will be up like this. Instead, it's down after market. We'll see tomorrow how it opens, but this is going to be a drag. If even good earnings are not enough to, lift the chip stocks, there might be a drag on QQQ for sure, and that's why money should be rotating out of this sector. Okay, money should be rotating out of this sector, getting that breadth indicator much higher. Okay, so all of our other plays that we have will go higher. Okay, so that's what I think will happen. And that's it. Let's see what happens on Thursday and Friday. Tomorrow we have the AAII investor sentiment survey, which I want to see if it's bullish or bearish, because it was very, very bearish last week. And I think we have non-farm payrolls coming on Friday, which is the big news of the week. All right, later, guys.